What is the easiest Forex strategy to implement? I'm going to go over the 4 types of Forex strategies and show you guys which one I think is the easiest for new traders to get started with. Okay, let's roll the intro. All right, traders, what's up, guys? Welcome back to the Top Trader channel. It's your head trader here, Cleveland Bishop. Hope you guys are having a good week so far. Okay, we did put out a Monday market breakdown earlier this week, so if you guys have not watched that, make sure you go check it out. I'll put it down in the description. All right, and so you guys are notified. Subscribe, okay, so that way you don't miss any of our videos, and like the video for your boy. I appreciate it. Okay, so when you are starting off in the FX business, hopefully you have some really good solid knowledge to basically understand exactly how markets work, how they function, who are the larger market participants, certain facets of, volatility, expected moves, all the different knowledge, the actual dictionary knowledge that you need to learn in FX. Because once you have that, you can start creating environments and start defining edges, okay? And so an edge is any advantage that you'd have over the market, all right? And so there are certain ways that you can get in the market, all right? Get exposure into, again, a potential price move, and certain ways are easier than others, okay? And so if you're starting off in the FX business, it's gonna be important for you to define exactly what type of trader you are and to understand that, okay, well, not only do I need to understand the type of trader I am, I need to make sure it fits in with my personality and that it's conducive to my current experience level. Okay, so I'm about to break down to you guys the 4 types of trading strategies, and then I'm going to give you guys the last one is going to be the one that I think you guys should be implementing. All right, but to do that, what we're going to have to do is we're going to have to head over to the whiteboard because it's a lot of drawing and stuff like that. All right, so guys, come follow me to the whiteboard and let's get started. All right, so the first type of strategy we're going to be discussing is the pullback. But remember, I am going to be basing the easiness off of these strategies in terms of how they rank based off of the average winning percentage, okay? Because winning percentages differ depending on the strategies. Take a look, all right? So let's say you're in a trending market and you're looking to catch a pullback or retracement in the in the ascending trend, right? Or the descending trend to the sell side, okay? So your job as a pullback trader, right, is to be able to calculate and define well when markets will be at a discount and how much of a discount they'll be, right? So usually you're going to have certain indications as to where you're going to catch the sell side move, right? So maybe you say to yourself, all right, usually around a 30% retracement, that's when I start to take markets back to the upside. Maybe you're looking at it in regards to structure. Hey, if markets hit back off on a previous structure, that's when I'll start to look for moves to the upside. It just depends on what your key indications are, all right? So again, for us or for anybody, again, it's going to be your job to calculate this point right here, okay? And so the reason why I think this is one of the hardest strategies and why most people see it's one of the hardest strategies, because if markets end up popping off and selling back down, sell side, and stopping before that price area, then you don't have an entry, right? And let's say markets end up getting to your price area, right? You start to get some size in that price area, but then markets can break down sell side and continue in the direction that you were assuming that they were going to go in. So either you can miss the trade entirely, or you can be a little bit early as to when you think markets are technically coined at a discount, all right? And so this part right here is really the reason why we see most traders fail, is because they're having a hard time calculating the other end of it, right? Usually they'll potentially have their stops too tight, so when they come into this price area, they'll just might be a little bit of volatility that whips them out, and then markets just start heading back in their general direction. Okay, so pullback trading, usually you guys are going to have lower winning percentages. If you guys remember or have ever read anything about the turtle traders, they were trending traders, and their average winning percentages were in the 30s and the 40s, and maybe sometimes they got to the 50s, but they were very excellent traders, because the pros to this type of strategy is the fact that you have all this upside. So you caught markets at a discount, right? So you automatically have this amount of upside that gives you profit. But again, it's a trending move as well, right? So that means you can break from the high and potentially start rolling stops and things in that regard. So the risk to reward ratio is higher for pullback strategies, but the winning ratio is lower, okay? But it compensates with that risk reward ratio, okay? Next, another type of strategy that again has a lower winning percentage is a counter trend strategy, aka a mean reversion strategy. We do use this strategy really heavily in our community. We have somewhat mastered it. We have a very simple way of kind of getting in on that move. If you guys want to know more, a little bit more about that, just click the link down in the description below. Okay, but this is how this strategy usually works. Let's say we're in that trending move, right? Markets are trading to the upside, maybe in a momentous fashion. You're not getting a lot of very sizable pullbacks. Okay. Your job as a mean reversions trader or a counter trend trader is to calculate when that high is going to actually happen. All right. And so think about all the times where you can have situations where you're faked out, right? You have some guys that are trying to catch the high here. You have other guys that are trying to catch the high here. There are many situations where you could potentially continue to be wrong because you're looking for that overall general corrective move back down into structure. So again, it's another scenario where you have a pretty large risk reward ratio because you're looking for an entire correction, but it's going to be hard to catch that high. And every time you don't pop, you got markets bringing you out. Okay, so this is why this is another not complex or complicated strategy. It's just, again, based off of the way it functions and based off of the way you're defining your edge and getting into the move, you will have a lower winning percentage. Okay, some big time counter trend traders were people like George Soros. Paul Tudor Jones was a big counter trend trader as well. All right, so again, you can research different people that are great at different types of strategies to give you a better idea as to how you need to be executing in it as well. Okay, we're counter trend traders as well, but we're also the last type of strategy that I'm going to discuss with you guys, which again is the most important one that you guys need to understand if you're new. Okay, but we got one more before that one. Okay, all right, so this one is pretty simple actually. That's why it's the next to the last one, because right before the last type of strategy that I'm going to tell you guys about, this one, range bound market trading strategies, consolidation based strategies, are pretty simple as well, because what you're simply doing is picking tops and bottoms, right? But you have to define a range. Now, for example, I was trading the Japanese yen back in 2013, and it was in this ridiculously tight range. I'm going to show you guys a screenshot here. And every time markets got to this base, I mean, we just bought over and over and over again up until the Japanese started to do this QE program. And now you see markets just ran outside of that range extremely fast. And then it was accelerated by the fact that the dollar started to end their QE program. So you saw a massive price move. Okay, but before that price move in that sentiment driven markets were fairly range bound. Okay, and so that's again a strategy where simply you're seeing certain structures form, and you're basically now saying, hey, my outcome that is going to weigh in my favor, right? My predictable outcome of buying the market down here at this lows is somewhat confirmed or helped by the fact that every time markets get to this price level, there are some type of buyers. All right. So the biggest thing that I see traders that trade this type of strategy do is, again, it's probably based off of the stops being too tight. Usually they'll say to themselves, okay, here's my somewhat general area as to where I see markets turning back around. I'm going to have my entry maybe here. And so there might be even wicks that come back down into that price area, but you're maybe ignoring them. You might be only looking at the closes of the candles. All right. So in that event, markets can come back down in the structure, give you a little up move or something along those lines, and then maybe pull you out and then start to break higher. Okay. What markets love to do is they love to create larger ranges. So whenever you see a tight range, markets are about to break out of that. And so what could happen is they could literally give you one of these, immediately create it to be a larger range, and then give you the price move that you're looking for. But before it does that, it could pull you out. Okay, so you always have to identify and try to categorize, okay, is this range, pretty tight? Is it pretty large? If so, that's going to give me an idea as to how I'm going to manage my money around that type of position. Okay, but these strategies can work pretty well, and they have a decent winning percentage. I'd say they probably clock in around the high 40s to the mid 50s in regards to their winning percentage. But the great thing is the stop isn't too far out, right? It has a pretty decent risk reward ratio, because again, hey, at the end of the day, if you're looking for markets to continue in a range, any kind of even somewhat sizable move outside of that, you've already liquidated the actual asset. Unlike a trending market where literally markets can be trending and you could probably see retracements from the 61.8 all the way up into the 38.2. Okay, and so that's a pretty large margin of error for a trend trading strategy. Again, that's why you're getting your lower win weights. But for this one, things are a little bit different, because again, any move out, you have a pretty easy idea as to say, okay, let me get out. All right, last but not least, let's discuss our last strategy. So this strategy here, folks, is going to be good for your beginners because of, again, the way it functions. It's what's called a breakout strategy, and a lot of people can also call them Momo basically Momo strats, basically momentum-based strategies, and because it's pretty simple to understand. So think of it in this context. Let's say we're in a trending move, okay? And by the way, there are different types of trending markets. I'm going to talk about that in just a second, because breakout strategies work really well for some types of trending markets and not so well for other types. But the thing about a breakout strategy is it can be used on higher time frames or really low time frames, 5 minutes, 30 minutes, you know, it depends on what, how you execute, okay? So simply, breakout strategies, markets trading to the upside in some type of general direction. You get some type of consolidation. You're not in the market at all as of yet. All you have to do is identify the consolidation and identify the extension. Once you have that, boom, now you have basically an entry. All right. So as long as markets, and as long as you think that markets have the propensity to continue to trade in that same direction, well, then that immediately means you have a defined edge. Because let's say that your target for markets to revert back up into was maybe some type of 50% retracement level on some larger price structure. Well, then now you can take breakouts all the way back up into that price area, up until you think that, okay, we might start to have markets turn around a bit and see some consolidation. Okay. So again, that's simply what a breakout strategy is. The way it functions in regards to its stop placement and things like that are pretty simple as well. Usually you're going to have your stops underneath the structure that formed where you were looking for the entry, and your take profit is usually going to be the size of that structure. Okay, maybe double the size, 3 times the size. It really just depends. We like to see 1-to-1 risk reward ratios for this type of strategy, and we exercise this type of strategy very, very well inside of the community. Okay, so if you want to learn a little bit more about it, you guys can click the link in the description. So again, it's pretty simple to understand. I think this is probably your best bet when you're a new trader, maybe looking for momentum. You can see momentum based off of fundamental news releases. You can see momentum based off of market inefficiency, weak legs. Okay, that's a little bit complex. Maybe Google it or get inside the community. We can discuss that. But there are lots of different causes where you might have a momentous move. Okay, and so lastly, I mentioned a second ago that there are 2 different types of trends. All right, and so I'm actually going to talk about that tomorrow. So if you guys subscribe, you guys will see that pushed out. Or if you are coming here later, it should be right next to this video. Okay, but it's really important for any trader to understand that there are different types of consolidated markets, different types of trending markets, and certain strategies are going to perform well in others. Okay, so that's going to be the video that we're going to drop tomorrow. If you guys have any questions about this stuff, please let me know. What type of strategy are you executing? I'll be interested to know that as well. All right, guys. So look, Average Joes to Trader Pros. Happy to have you guys here with the top traders. We'll talk to you guys soon.